Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Kane, Chief Projects Officer of Powin, and Tim Weiss, co-founder and CEO of Optera. We are here to discuss the clear need and demand for climate tech solutions despite an evolving policy landscape and administration transition. Gentlemen, it is great to have the both of you with us. Welcome to Trade Talks. And Brian, before we get into the conversation, give us an overview of where Powin sits within the climate tech ecosystem.
Thanks for having me, Jill. So Powin is enabling the clean energy transition by delivering and operating about 17 gigawatt hours under development at this point of large-scale utility energy storage. So what that means is we partner with all forms of generation to provide the availability of dispatch of energy on demand for independent power producers, utilities, and developers alike.
All right, and Tim, tell us about the work you're doing at Optera.
Yeah, so Optera, we work with many of the largest companies in the world, multinationals, on how they're really addressing the energy transition, the transition to low carbon economy. And we do that through providing software and services to help them quantify their carbon emissions and their environmental impacts, and ultimately help them understand and deliver insights across the business into how they can actually decarbonize. How can they get this kind of their hands around these problems where they're navigating how they're fundamentally changing how their products are made, or what products they're selling, and how they're adapting their businesses fundamentally to the lower carbon way of operating.
Has that been one of the challenges within the industry in terms of being able to quantify and give data-driven metrics, standardize it, if you will?
Yeah, so this is kind of, unbeknownst to a lot of people, this has been around for a long time, where companies have been trying to get their hands around what are their true carbon emissions, what are their impacts overall. But the challenge is you don't have the data for some of the most material problems. And fundamentally, when you think about it, companies are the source of information for how they operate, right? They have facility data, they have their, a lot of their understanding of kind of what they're selling and how they're selling it. But they have no visibility into the emissions or energy intensity of their manufacturing processes that they've outsourced to their suppliers, or that the energy demands of their products when they're in the hands of their customers. And so most of the data that companies need to navigate and understand the risks and opportunities with the energy transition is something they don't have access to. And that's a problem that we have been focused on, is really helping organizations really collaborate and engage and collect data across their vast supply chains and translate that into an actionable path into how they're going to decarbonize overall.
Yeah, and Brian, one of the other challenges as well is infrastructure and solutions to keep that momentum going, because I mean the demand for energy is only going to increase.
Absolutely. In fact, it continues to accelerate with AI demand upcoming, as well as the electrification of the grid driven by EVs. So what technologies like energy storage enable is, rather than having to build out the comprehensive ecosystem, you can target portions of the grid or local distribution network to allow for that energy to be dispatched on demand, rather than building out generation, transmission, and distribution. And so the idea of storage and dispatch is not new, right? It's a generally accepted commercial practice, and over the last 10 to 15 years, it's become an important tool and will continue to be a tool that enables large-scale corporations or utilities to partner with developers to drive this power demand as rapidly as possible while the infrastructure catches up.
Because if you were to do the build out, that's when you start talking about capital intensity and time versus using existing infrastructure.
Correct. So, right, whether it be the regulatory environment or just the physics of developing a grid that can keep up with the speed at which we're adding demand, it takes time. And in some cases, there are states or federal regulations that aren't necessarily matched with the speed with which any organization wants to bring on a new technology, whether it be manufacturing or data center applications or a new development. And so we need an ecosystem that allows for the delivery of energy and maximizing daily operation such that we can bring those new technologies online to bear for the consumer as rapidly as possible.
Let's take a step back one moment just to put this into context. So over 17,000 megawatt hours are deployed in construction worldwide. What does that equal? How can we conceptualize that?
Yeah, so the simplest example is it's roughly 2 million homes a day, every day for about 4 hours. And if you average it out in a couple other ways, you could get as many as 10 million homes out of that energy. And the way that translates is using solar as an example, right? Solar rises and sets with the sun. That we don't consume energy the same way that the sun moves across the earth. So energy storage partnered with solar allows you to capture the energy of the sun and wait to dispatch it as our demand increases over the course of a day.
And Tim, what are some of the pressures that companies are feeling right now, particularly around climate action? So 2 questions here. Who are the stakeholders, right? And then what are the pressures they are facing, and what's a logical solution, or at least a place to start?
Yeah, fundamentally there's kind of like some of the most important stakeholders that companies face are really applying much more pressure than they have historically, and it's really regulators, it's investors, and it's customers. And the pressures that we see most acutely right now, what I'd say is that the overall landscape has evolved from a voluntary world, which has been around for 20 years, to a far more competitive market-driven world and regulatory-driven world. And so the 2 forces that are most acute on businesses right now are first regulation. We have regulation that is moving significantly in the EU, and that is having ripple effects across every major business and every kind of supply chain ecosystem. And the second pressure that's, I would say, one that we are most attuned to is all of these companies that have to respond to these requests for data from the investment markets, from regulatory markets. They have to have an answer for their entire value chain, and that means they need data from their suppliers. And so the B2B pressure in supply chain ecosystems is immense. And when you think about all of these manufacturers, all of these energy-intensive organizations that have really largely not moved very quickly on the energy transition, haven't been forced to or pressured very directly because they're sheltered from maybe some of the spotlight of other companies, they are now getting really direct pressure from their most important customers, their most strategic customers, to act on climate. And they have to do it in a credible way. This has to be reflected in the numbers. It's not really about, ultimately a CSR report and what can, ultimately stories that you can tell. It's about performance. It's about showing that you can produce products in a lower carbon way, in a lower energy intensive way, and being a partner to your customers through this energy transition.
Yeah, it's not like having a really well-produced commercial on national TV is going to suffice in terms of telling your story or your strategy, which is where quantifiable data comes in.
Yeah.
Yeah.
And you think about like this is, I don't think there's a single person on this planet that thinks we're going to consume more fossil fuels or as many fossil fuels as we do today as we will in the future. And so this transition is creating and manifesting real risk to every business, some more acutely than others. And that means that investors, regulators, these customers, like they all want evidence that businesses are doing something with this problem. They're really getting a handle on it and thinking ahead. And so credibility and true authenticity and kind of and really auditability around this data and the evidence that companies are demonstrating in their performance is now more important than ever.
Yeah.
And it's an excellent point when you think about global supply chain, right? The energy transition is not unique to the United States or North America. It's happening everywhere. And whether you're on the supply side, in our case, we're on the supply side of providing solutions, or on the consumption side, in all cases, corporations have to be responsible in understanding their comprehensive global supply chain, 1. And then 2, they have to have a supply chain that allows them to operate where they are consistently. So as the regulatory environment shifts with change in administration, organizations on the supply side need to have a strategy that's effective in the United States, but also have a strategy that's effective in the EU or in Southeast Asia or in Australia, all of which are markets that we have to be able and are operating in. So it's a really challenging and interesting and exciting environment to be developing energy or consuming it. And there's a lot of activity that supports it.
Yeah, there certainly is. And then when you think about from a regulatory perspective, being able to manage that in all these different jurisdictions, not only within the US, but the EU, for example, they have more stringent environmental laws on the books already. So Tim, when you think about advising companies on how to navigate the uncertainty around a shifting policy and environment and what that means to become a low carbon company, I'm on the media side of the house, or if you're working in Marcoms, or if you're in the risk management office or finance, how are companies expressing this to employees so that the culture is low carbon? I honestly don't necessarily know what my contributions here or not get Nasdaq there, right?
No, it's a great question. I think that there's three things that a company needs right now, really fundamentally. It's you need to have the data, and then that data needs to inform a comprehensive plan. You might not act on that plan right away. You might understand that there's certain things that are very low risk, very obvious moves to make right now, and some that are longer term plays. You're shifting what products you're truly investing in and how you're manufacturing. It's a long-term process you're going to adapt. And so that gets to the third point, which is you need to have a workforce and a labor force that understands this problem. The first, sustainability and climate has been a siloed activity for many years. It has been the function of a sustainability team that's comprised of maybe 2, 3, 5 people within a massive multinational. And that is not effective today. And it won't work for today's environment because fundamentally, companies are trying to figure out how they're transitioning their core operations to a different way of working, a different version of this economy. And it meaningfully influences how you make your products, what products you sell, and how you do business and what assets have value. And so really the branches of the business that are going to have a massive effect are really the core operations. So we find that we see leading companies just investing heavily in understanding how the rest of the business is going to be impacted by the climate and the energy transition and what they can do about it, and using this data as a platform for shared understanding and prioritization of activities.
Yeah, speaking of prioritization, Brian, when you think about triaging when it comes to energy reliability, right? Let's say there's something down within the system. You have it noted here, the California heat wave in 2022. How do you triage what power goes where?
Well, so that's the challenge, right? So the reference you just made, the cloud showed up at the wrong time of the day and there was an issue.
Right.
So the way that the environment is supporting sustainability and reliability is to develop commonly referred to as microgrids. And so, for example, Berkshire Hathaway is funding a project in West Virginia that's the largest solar plus storage microgrid in the United States. Why are they doing that? There's 3 reasons. One, there's a development to create a manufacturing plant in that facility, in that area. 2, the utility can't move quickly enough to deliver it, but they're committed to over time. And then 3, in order for the user to maximize their benefit, they need to ensure that it's reliable. And so the way you triage going forward as we continue to become more dense and more energy intensive is to create micro systems that partner with the macro system, commonly referred to as the utility, and ensure that all entities, those financing the projects, those operating the projects, and the utilities that are responsible for the larger distribution system operate together such that everybody receives reliable power while we grow through the transition.
So it sounds like leveraging public-private partnerships to a certain extent?
Correct. In all cases, there's a fundamental commitment between the parties involved to ensure that more than just the consumer, which is, the best example is putting a diesel generator behind your meter. No one else benefits from that. Microgrid applications, storage applications, solar, wind, other clean technologies as well are designed to go both ways. You can provide local, or you can feed it back to the larger grid to enable the benefit across a larger geographical or other technical ecosystem.
Tim, do you think it might be almost a hybrid situation, not necessarily old energy versus new energy? What about redundancies, right?
Yeah, I think, well, I was just in DC a couple weeks ago and meeting with different senators on both sides of the aisle, meeting with ultimately, the former head of the EPA under the previous Trump administration, and understanding that like everyone sees a problem of energy demand. We just don't have enough energy for what's coming. You have AI, you have the electrification of our society, which is happening, and it's not stopping. And we have this interesting dynamic where renewables are by far and away just cheaper and better in many instances, but they are not they're not the only solution you can deploy in all instances. And so we are going to see, and I expect us to see a bit of a resurgence in nuclear. I think there's been a lot of investments that have been made, and there's certainly kind of a bit of a solution that is complementary to renewable energy. We see battery storage, obviously, that's needed. And then there's going to be natural gas plants that are bridging as well. And it's going to be, we kind of, at this moment, will see everything being developed because we have a problem of not having enough energy. And we also have this long-term climate problem. And so we're going to be trying to solve both of these at the same time. The net effect is that I think we're going to deploy as much kind of low cost and clean technology as possible and bridge with other alternatives as needed.
I wonder if that's kind of where the conversation went off the cliff, as an example, where there was these aggressive goals where it had to be, no longer A, it has to be to B, but how are we going to get from A to B, right? And I think that probably did not help foster the conversation. As an example, let's say your primary source of power, and I do not have an engineering background, so I'm asking a very elementary question. If your primary source of power is solar or wind, there's no wind or there's no sun that day. What about a natural gas generator as a backup? Is that still okay in the clean tech world, or why is that frowned upon?
Well, the challenge is that we have, I'll put on the clear climate science hat, which is we have very little time, right, in this transition. Like the next, it's kind of not necessarily talked about as much, but like the next half a decade really are going to determine what path we're on in terms of the future of our path to the low carbon economy and achieving the 1.5 or 2 degree pathway set up by the Paris Agreement. And if the main factor in that is how much coal are we going to burn in the future, it's not really a natural gas problem. Natural gas is certainly not as clean as other alternatives, but we need to decommission coal to achieve any of these goals. It needs to happen really quickly. I don't think there's anyone that believes that renewables as they are today are going to be the only solution, but they have to be the predominant solution, or we have very little time. So there's going to be a bit of a trade-off, and we have to look at what is economically viable as well as what achieves both ends. But there is a sense of urgency right now in solving this problem, and you have to really look at prioritizing lower carbon alternatives ahead of others.
Yeah, and you used the term bridge and referenced coal versus natural gas. So an important understanding of how the grid operates is most of the base load is very clean. Nuclear is counted against that very clean. Yep. The issue is peaking. And so historically in the United States, we used coal, which was cheap, easy to burn, ready to react. That's being phased out, as an example. And in Michigan right now, there's a project called Trenton Channel with DTE. They've decommissioned their coal plant. They're replacing it with batteries because they don't need that coal plant to run 24/7. They needed it to provide peak energy when energy is demanded. So when you think about intermittent, natural gas is a solution. It is the cleanest combustion, and there are other ways to do it without combustion. Absolutely, it's going to be part of the bridge. And then using storage as an example, it replaces the peak demand. So when you can produce wind at night, rather than just slowing down the wind turbine, you deliver it to a battery. Rather than curtailing solar because there's not enough demand on the grid at that moment, you deliver it to a storage solution. And then you transition into other versions of storage over the long term.
Yeah, see, that I can conceptualize. That makes sense to me. All right, appreciate both of your insights. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.